Hi everybody, Marco Carvalho here from businesscreditbuilders.org. Today's video we're going to talk about using business credit cards as a real estate investor, the power of leverage. This video is for you if you want to learn how to use business credit cards and why they're so beneficial for you as a real estate investor. We're going to share with you all the strategies on best to maximize the power of business credit cards as a real estate investor. So let's get started. All right, so first and foremost, I want to talk about the benefits. You know, you hear about, for you as a real estate investor, it's all about obviously leverage, using other people's money. So what I want to talk about is one of the most powerful strategies using business credit card is the ability to get 0% financing on your money for your real estate deals. Whether you're trying to rehab a property, you're trying to buy a rental, etc., 0% financing is available with business credit cards. When you apply, many card issuers will offer your company a 0% interest rate for a period of up to 18 months. Okay, and you can use these business credit cards for purchases for your rehabs. You can use it for down payment money. I'm going to share with you how to do that. So you can use these business credit cards and benefit from 0% financing. The next thing is separating your personal and business expenses. This is the key thing, because right now ask yourself, am I using my personal credit cards or my own cash for my real estate business? Are you using your own personal credit cards to buy materials? Are you using it to pay contractors? Are you using it for putting fuel in your car to go drive out and see some properties? So you need to create that separation, not just from an expense standpoint, but from a tax standpoint. When you file your tax returns, you want to have all those expenses on a business credit card because it makes it much easier for you when you're filing your taxes to create that separation. Most importantly, this creates that separation between you, your personal credit, as well as your business credit. So if you're using your personal credit cards for your real estate business, you want to get away from that. You want to start using your business credit cards that'll help you start building up your business credit history. That's another advantage to using business credit cards, because not only are you going to help build up the credit worthiness of your own company, so when you're applying for additional credit as a business, you're getting additional financing. Lenders, banks, suppliers, vendors, they can now check your business's credit reports, which gives you an opportunity to get maybe more credit, better terms, better interest rate, etc. So that's why you want to build up your business credit. The second most important thing, well, I'm obviously talking about a lot of things here, but is establishing multiple bank relationships. So right now, if you have all your eggs in one basket, meaning you only have one bank you're doing business with, you have one credit card that you use for your business, you're really operating at a risk. The reason why is that any time that bank may reduce your credit limit, or they may change terms, or they may even close your account. So you want to establish multiple bank relationships. You can do that whether setting up multiple business checking accounts, but with credit cards for the business, you're also establishing a relationship with the bank when they issue you a credit card. So it's really important to establish those multiple relationships, because this gives you the opportunity as an investor to get additional credit limit increases, maybe additional card that bank card issuer may offer, or maybe additional funding product. So when you're in their ecosystem and you have a relationship, you have history, that allows you to have leverage because they already have a history with you, and you're more in a better position to get approved for additional credit and financing with a bank that you have a relationship with. This also potentially, like I said, future credit limit increases with the benefits of business credit cards. Another thing that doesn't get talked about too much is receiving targeted business credit card offers. So once you have that relationship, you have a business credit card with a card issuer and you're in the ecosystem, many card issuers like American Express, you have Chase, Citi, etc. They have multiple business credit card products. Once you're in their system as a card holder, they may send you targeted offers in the mail as a pre-approval. Doesn't mean you're automatically approved, but a pre-offer for additional business credit card, maybe a different type of business credit card. So you'll get these special offers and incentives once you build these additional relationships. Also, preserve your cash flow, preserve your cash. Obviously in real estate, you know the term other people's money. So when you're using business credit cards, you're using other people's money. You don't have to use your own cash. So what's unique is if you have your own cash, you have money set aside, but you want to preserve it, business credit cards can help you using those cards for expenses. So no longer use your personal credit cards anymore. So that's the benefit of using business credit cards. You no longer impact your personal credit. So if you're using personal credit cards right now, you know when you put on expenses for your business on your personal credit cards and you don't pay those off right away, or they show up on your personal credit report, that's now going to impact your personal credit utilization. So now you have your business expenses that you use for real estate on your personal credit cards, and it affects your credit utilization, which also impacts your personal credit scores. So by using business credit cards that only report to the business credit reporting agencies, you're keeping your FICO scores intact, you're not impacting your personal credit utilization, and you're protecting your personal credit. The one thing I want to make sure that you understand, though, is not all business credit cards report to the Business Credit Bureau. Some business credit cards in the marketplace report to your personal credit. So you want to stay away from those types of business credit cards, because although they're labeled as a business credit card, if it reports to your personal credit reports, that account does, then that's where you're going to be impacted on all sides of your personal credit. And I don't view those as a true business credit card. You only want to acquire business credit cards that report to the business credit bureaus only. Okay. Now, the other benefit of using business credit cards is sign-up bonuses you'll receive, cashbacks, and/or rewards. So when you're putting all your expenses, real estate related expenses on your business credit cards, you get all these perks and bonuses. So I want to talk about using business credit cards first for purchases. You want to utilize business credit cards and don't use cash anymore. Put it on your business credit cards and then pay it off before the due date. Okay, because you get all the other benefits. You get all the cashback rewards. You might have a bonus offer if you open a card recently. So you want to use your business credit cards for your materials, supplies, maybe purchasing your appliances if you're doing rehabs, cabinets, fixtures, etc. Then you have your fuel costs and even soft costs that you can put on your business credit cards. One thing I want to give you an example. Let's say you have $20,000 in rehab costs for a real estate investment property. Right now, this particular card, the Bank of America Advantage card, they offer 0% intro APR on purchases for 9 billing cycles. So let's say you get approved for this card and you have a $30,000 credit limit for this card, and you want to put all $20,000 of that rehab costs on this particular business credit card that you just acquired. That $20,000 now you're gonna have 0% interest on that money for 9 billing cycles. Okay, so by then you're gonna be fixing up your property. You may sell it at that point and get a return on your money, pay off the card, and you had 0% money for that period of time. You didn't pay any interest on that money. It's basically free money. But in addition to that, with this particular card, what they offer you is a $300 statement credit if you spend $3,000 in your first 3 months of acquiring this particular card. So in this example, you would get $300 statement credit in addition to 0% on your money for 9 billing cycles. Plus, this card has a 1% cash back reward. So you get $20,000, which is what you put on this card for your materials, to do your rehab. You get 1% back, which is $200. So you're getting $500 back. $300 statement credit, $200 cash. Plus, you're getting 0% on your money on this rehab for 9 billing cycles. Okay, so that's the power of strategically utilizing business credit cards for investing in your real estate properties. And most people might say, well, what do I do once the 0% APR period is over? Well, obviously, then your regular interest rate kicks in, but you can reset that by maybe inquiring with that bank card issuer if they have a balance transfer offer they can offer you if you're thinking about transferring debt from another card onto this card, and you can repeat that cycle of 0% on your money. Okay, so that's a strategy that's very, very easy to integrate. The next thing for using business credit cards, not just for purchases, but accessing cash for your real estate deals. Now, this is really, really powerful because getting cash from business credit cards is a strategy you can utilize, and you have different options. You may need cash for a down payment at closing. You may need cash to pay a contractor. So there's several ways for you to get cash from your business credit cards. You can utilize a cash advance. Obviously, we know the dangers of using cash advances on business credit cards. There's a couple of limitations you have. First, a business credit card issuer may give you a limit to how much you can cash advance. Sometimes you may only be able to cash advance 20 to 50% of the credit card's limit. Okay, so that limits you. If you have a $10,000 card and they give you a 30% cash advance limit, then you only really can pull up to $3,000 in cash on that $10,000 credit limit card. Okay, so there are some limitations. Some card issuers have high cash advance percentages, some have lower. Well, it typically can range from 20 to 50%. that you could pull in cash. Now, when you do a cash advance, they have a fee that's that you incur, and then there's a high interest rate you'll get on that cash advance balance now on the card. So to avoid it, you want to utilize like a balance transfer strategy, which we've done videos on that. You want to watch that right here. But this is a more very risky strategy when you're pulling cash, utilizing cash advance. So there are other options for you. The most important thing is, why do you need the cash? Is there another way around it? Can you just put it on a business credit card rather than use the cash advance? If you have to pay another company, a contractor, you have to pay the title company in cash, you can't use your credit card, then there's an option called a digital payment system. There's digital payment products out there that allow you to convert your credit card into cash. And I'll explain to you how that actually works. So using a digital payment system is an option for you to access cash for your real estate deal. The next option is utilizing a cash liquidation service. This is a service that we provide to our clients who have gone through our business credit card funding service. Okay, and this is another way for you to pull up to 90% of your credit limits in cash. Okay, so with a cash advance, you may be limited to 20 to 50% of your card limits you can pull in cash. With our cash liquidation service, you can pull up to 90% of your credit limits in cash. All right, so now remember, this is only for our clients. It's a standalone service. You have to have been and gone through our credit card funding program to benefit from this particular service. Now, let me talk about utilizing a digital payment system in this example here. So let's say you have a business credit card that has a $25,000 credit limit. Let's say you need $20,000 to do a wire transfer to a title company at closing. A couple days before closing, you need to have these funds deposited into the title company. So in utilizing a digital payment system, like Plastic, Plastic is one of a digital payment system. There's Melio out there. They give you the opportunity to use a business credit card, and they literally process the payment from your business credit card and either wire transfer, ACH deposit, or use a physical check to pay the recipient. Okay, they do this and they charge a fee to do that. But the advantage for you as a real estate investor is you're basically pulling the funds from your credit card limit to pay the recipient in cash. Okay, so this is a way for you to utilize your business credit cards to transact a real estate deal. Now, the benefit to this is the transaction is going to show up as an actual purchase with your credit card company. So you still benefit. In the previous example, if you just got this Bank of America Advantage card, you would get 0% APR for 9 billing cycles on that $20,000 that you use the Plastic digital payment service for. You would get the $300 statement credit because you're still meeting that $3,000 spend requirement, and you get 1% cash back, which is $200. However, Plastic will charge right now, generally it's 2.9% is the fee. So 2.9% of the $20,000 that you're transferring is a $580 fee. But remember, you're getting a $300 statement credit from your credit card. You're getting the cash back. So to do this transaction, pulling $20,000 in cash from your business credit card to transfer it to your title company to close on a real estate deal is costing you $80 if you look at it, which is huge. Yes, you're going to have a $20,000 balance, $20,000 in the fee here on your credit card, $20,580 balance on your credit card. But let's say that real estate transaction you just closed on, you're going to fix and flip that property in 90 days, etc. You still have interest-free money for 9 billing cycles on that balance. Okay, so you're not paying any interest. So whether you want to fix and flip that property or you're looking just to utilize the cash flow from the rental to pay down the credit card and eventually pay it off, that's what's really powerful about the strategy, using cash for your real estate deals. Okay, so this is really, really powerful. I'm just giving you these examples. So I want to share with you really quick the digital payment systems. There's Plastic, and there's Melio, and there's other services out there that allow you to use your business credit cards to pay other companies in cash. The difference, though, is with these service providers, you cannot pay yourself in cash, your own company. So that's the challenge you're going to run into, and we have a solution for that. But let's say you need the cash. You're not gonna pay the title company. We'll get into that in a little bit, how you can get cash from your business credit cards deposit into your own business account. But Plastic and Melio allows you to pay contractors in cash. You may have contractors who don't want to take credit card payments, or you have to pay them via check, wire transfer. You can use the business credit card, and Plastic and Melio will pay these companies via wire transfer, ACH deposit, or physical check. So you can pay vendors in cash, you can pay title companies in cash, you can pay your suppliers, etc. So let me kind of walk through how to set this up. So, and you can do your research on Plastic and Melio. It's free to sign up. They don't charge you anything to sign up for their services. You can sign up for both of them if you want. But if you set up an account with them, then you're going to connect the business credit cards that you want to use to pay, whether it's a title company or the recipients, whatever. You link it. You basically enter that credit card information in their system. And then you're going to set up the ability to do wire transfers, because you're going to need that if you're going to use it to wire transfer a title company at closing. You want to enter the recipient details. So if you have a title company, etc., you put that information in there. You're going to initiate the wire transfer, provide any additional required information they may need, and then you complete the transaction. Now, if you have a closing, obviously you're going to want to do this a couple days before your closing date. You want to make sure you initiate this transfer. Okay, so that's paying in cash using business credit cards. This is another way for you to benefit using business credit cards. So to sum it all up, with business credit cards in real estate investing, and this is when you're opening up some business credit cards, you're going to get the 0% offers, 0% APR for up to 18 months. So you can use that for business purchases and expenses. You can use it for renovations, appliances, cabinets, etc. You can use it for down payment on real estate, closing costs or soft costs. You can use it to pay contractors, suppliers, and vendors. But utilizing this strategy, you're getting 0% on your money, right, during that period of time. You're building your business credit. You're creating that separation between you and your business, okay? And then at the same time, you're getting all rewards. You're maybe getting cash back rewards. You're getting all these other perks and benefits. So that's the benefit of using business credit cards. So I want to give you another comparison on using other types of funding products. And granted, this is me not saying that using HELOCs or personal loans for real estate investing is wrong. But you can be integrating all these strategies, okay? But I want to give you a real quick comparison as an investor. You want to explore all types of ways for you to raise the capital you need to do your real estate investments. What's most important, though, is when you invest and you use these, there's risk. There's risks using credit cards. There's risk getting a personal loan. There's risk to using a HELOC. That's why you want to make sure you have an exit strategy in place. You want to make sure you know what's going to be the worst case scenario with your investment property, what's going to be the return on your money, how fast you're going to get a return on your money, etc. So you want to factor all those in and map that out. And I like to use that term, reverse engineer everything. Okay, this is where you want to be. What do you got to do to achieve that goal? Okay, so for example, on HELOCs, the average right now is 7.76. You have to actually own your own property and have equity in your property to be able to get a home equity line of credit. But that's an option some investors use is a HELOC. The time to fund on those can be some time because they have to get the appraisal. There's the full docs they may require from you. You don't have to have a time in business for that. There's no income verification with HELOCs. You can have a 600 score. But with interest rates, remember, if you have an interest-only HELOC, that could get quite expensive. You have a large amount of money on there, especially with rates going up, etc. So you want to be really careful with HELOCs. Unless you're doing fix and flips, you're going to return your money pretty quick. Then it's a great strategy, but you're going to need documentation for those. Personal loan funding, that's another option. That's just getting a term loan. It's a loan to you. It's cash in your bank account. You go to a lender for that. There's plenty of them out there. There's online lenders out there. You can get the money pretty quickly. Now, the risk to that, you're not putting that money to work. You're still making your monthly payments because you have to repay back on that loan. All right? Interest rates can range from 5.99% up to 36% on personal loans. So I wouldn't advise getting a personal loan if you have bad credit because it's going to cost you a ton of money. And you have to verify income. You have to be making income that you can verify through pay stubs or tax returns, etc. But so that's an option. With business credit card funding, you can see on this chart, the 0%, it's fast funding. With our funding service, 14 to 20 days, we acquire up to 5 business credit cards for you, so it's fast. And there's no doc, so you don't have to provide any type of financials, no tax returns. There's no age and business requirement. You could have formed your company today and still get business credit card funding. There's no revenue requirement. Now, the credit score requirement is 680 or higher, at least 2 bureaus. There's other factors we look at and for you to get approved for business credit cards. And I'm going to share with you some example cards that we recommend. And I'll get to that in a minute. Okay, so let's talk about before you apply for business credit cards, you want to know where you stand. Okay, you want to know what are your FICO scores, not your Vantage score, not your educational score. You want to know what your FICO scores are at. Because most card issuers will pull your FICO bank card score, which is your credit card score. They'll pull your FICO score. So there's a way for you to get all 3 of your credit reports and FICO scores, your actual FICO scores. You go to knowmycredit.org. That'll take you to our provider. They have a special right now, $1 for 7 days to access all 3 reports and scores. And then they have a monitoring service, which I encourage you to have because you always want to monitor your credit. And make sure it's accurate. So make sure you always know where you stand before you apply for credit. Well, in this chart here, we're going to share with you if you're falling in between the 300 to 669 range, you got to work on repairing and rebuilding up your personal credit. Very, very important. If it's a utilization issue, you want to look on consolidation. If you have just some bad items on your credit report, you want to look at rehabilitating your personal credit and get you up there to 680 or higher. So if you're in the 680, 670 or higher credit score range, then you may be in a position to qualify for types of business credit cards. Okay, so first, know where you stand. Now, let's talk about some business credit cards that I think are really great for real estate investors. These are some of my favorite. You have the Blue Business Cash credit card from American Express, the Blue Business Plus credit card from American Express. These are 2 great cards that American Express offers for business owners. It reports only your business credit report. Both of these cards offer 0% intra APR for 12 months. You get 1 to 2% back on the business cash card. So all your purchases, you get money back. And on the Plus card, they're giving you 1 to 2 points back, 2 times points back on that card. So on the first card, you're going to get a $250 statement credit when you spend $3,000 within your first 3 months. The second card, which is the Plus card, you'll get 15,000 points if you spend up to $3,000. You spend $3,000 in the first 3 months to opening this card. There's no annual fee with these cards, so that's why I love them. No annual fees, and it's a great card to have that you can use for real estate, putting your materials on these cards, either one of them. Okay, so now one thing with American Express that I want to make sure you're aware of: if you already have an American Express personal credit card, that's great because you have an established relationship with American Express. So what you want to do is log into your American Express account, search for one of these business cards, and apply as you're logged into your American Express, because they'll do only soft pulls with American Express if you're already in their ecosystem, and you're much more likely to get approved if you already have an existing card with them. That's what's really huge about being with American Express, because all of your future cards that you apply with them and you're in their ecosystem is soft pulls. You're not going to get any more hard pulls. Okay, so that's what I love about American Express. And these are really great cards because they report to the business credit bureaus. The next thing I want to talk about is the Chase Inc. Business Unlimited credit card and the Inc. Business Cash credit card. These are also 2 really great business credit cards for real estate investors. They offer 0% intra APR for 12 months right now. And keep in mind, what I'm sharing with you now is what they're currently offering right now at the recording of this video. Obviously, we know that banks change their offers, but right now, as of now, they're offering 0% intra APR on these 2 cards for 12 months. The first card, the Unlimited, offers 1.5% cash back, and the second card is up to 5% cash back. You get a $750 cashback bonus when you spend $6,000 in the first 3 months of each one of these cards. Okay, that's a big chunk of money, and there's no annual fee with these cards. So if you're an investor who doesn't like annual fees, these are great card options for you. Now, granted, there are many other cards out there. I'm just giving you some of my favorites that I think are easy entry points. They don't have any annual fees, and they do give you the opportunity to get 0% intra APR. Okay. Now, keep in mind with Chase, you're probably familiar with the 524 rule. There's tons of videos out there about the 524. To really sum it up, at the end of the day, is if you open 5 credit cards that show up on your personal credit report, that you open those 5 cards within a 24-month period, you will automatically get denied if you apply with Chase. that. So if you open 4 personal credit cards that show up on your personal credit reports, you're okay to apply for Chase. If you're at 5 or more in a 24-month period, then you don't want to apply for Chase. Okay. Now, you may be asking, what about business credit card? Does that count? If the credit card reports to your personal credit, that's all that impacts the 524 rule. If you got a business credit card that only reports to the business credit bureaus and it doesn't show up on your personal credit, then obviously that wouldn't apply to the 524 rule. Okay, so I just want to make sure you're aware of that before you apply for this particular card. But what if you're like, I don't know what type of business credit cards I pre-qualify for or I qualify for. I don't want to start applying, get declined, because obviously when you apply and you start getting declined at 2 or more places, then all the other card issuers are going to start denying you when you start getting too many inquiries. So you don't want to go out there and start applying for everything. That's why, like I tell you, it's very important to already be in an ecosystem with a particular card issuer before you apply, specifically for Chase or American Express. But we, as a company, offer an opportunity for you to know what you qualify for as far as how much we can acquire for you in business credit cards. And these are for business credit cards. You can get up to 18 months and 0% APR on purchases, just what I described in this video. They only report to the business credit bureaus, not your personal credit. Now, one thing I do want to shine on is with all these cards, whether it's American Express or Chase, they will run a personal credit check on you, when you're applying for a business credit card. So when we say it won't show up on your personal credit, we're talking about the actual card account. Once you're approved, the card doesn't report to your business credit, but the inquiry will. How we limit inquiries is typically bank card issuers may pull from 1 or 2 bureaus, not all 3. So just because you get 4 or 5 cards doesn't mean you're going to have 4 or 5 inquiries on each bureau. You may have 1 or 2 inquiries on one bureau, 2 inquiries on another one, etc. So you'll take a small FICO hit for about 90 days, but then you'll be fine. Okay, but the accounts won't show up on your personal credit. So with business credit card funding, we offer free pre-qualification review. This gives you the opportunity. There's no cost for this review. There's no hard pull on your credit. You're basically filling out a short form to tell us a little bit about you and your business. You're uploading a recent copy of your personal credit report. So we do an analyzation for you, and we provide you in 24 to 48 hours a funding projection, how much in business credit cards we can acquire for you in 14 to 20 days. And we go up to $150,000 in total credit limits that you can acquire. Now, one thing I want to point out, though, is the notion that if I have, let's say, a 740 credit score, I should be able to get 150,000 in total credits. I want to share with you, how do you get these large amounts of credit in 14 to 20 days? That projection is going to be solely based on 2 main factors. These are the 2 main factors. Number 1 is comparable credit on your personal side, because you are co-signing for your business. Your credit report is being looked at by the banks for which you have no relationship with this program. Okay, so when we're presenting to the bank, they're going to look at your personal credit. They're going to look at your comparable credit. How high are your credit limits on your primary personal credit cards? Not authorized user cards, your primary cards. What's your highest credit limits? How long have you had those cards? Which banks do you have those cards with? What's your credit utilization, your individual credit utilization and your overall credit utilization? They're going to look at your payment history. Okay, this is what goes into a review with us prior to us giving you a projection. Also, what other accounts do you have? Do you have a mortgage reporting? Do you have maybe auto loan reporting? How many recent accounts have you opened? Have you opened up a couple credit cards in the past 90 days? Have you opened 3 or 4 of them? That's too much activity. Okay, so inquiries are another issue that we looked at. And then the other major factor, of course, is the age of the business. That does play a small role. So if you're a startup, you're more risky, but that's okay. But if you have 2 years or more in business as an entity and you're the original owner, you're on the incorporation docs, that's a home run right there. That's great. That's huge. Okay, so those are just some of the factors that go into a pre-qualification review. Okay, so now with this particular review, we'll get back to you in 24 to 48 hours. We provide you a funding projection. If you do want to move forward, then the processing time takes 14, 20 days for acquisition to get all these cards for you. And there's no upfront fee for this. Our processing company is paid on the back end. Okay, so we don't charge you anything ourselves. We don't charge you any upfront fee. There's no hidden fees. There's no recurring fees. This is a one-time acquisition fee on the back end. Now, to get started with this pre-qualification review, you just go to businessfundingreview.com, fill out that form. You can upload your credit report securely. And like I said, on that form, also on the bottom, there's the link to knowmycredit.org if you need to order your tri-merge credit report and FICO scores. It'll take us 24 to 48 hours to get back to you. You will get an email that it's under review, and then we'll contact you with the funding projections and results. Okay, so let me just share with you, because there's other processing companies that do similar services like credit card funding. But like I said, our processing time is 14 to 20 days. It's not 12 months. It's not 30 days. It's not 45 days or 90 days. It's 14, 20 days and you're done. You got your credit cards and you're ready to go. So timing is one thing if you need access to the credit right away. The next thing is fee. We don't charge anything up front. That's another thing to take into consideration. And these are only business credit cards that we acquire for you. They're not personal credit cards. We can get those if you want those, but this is business credit cards that only report to the business credit bureaus. It's revolving credit. These aren't vendor accounts. These aren't gas cards or anything like that. These are business credit cards. Another additional client-only benefits available to you once you complete this business credit card funding is the cash liquidation service. That's a separate service, separate fee. It's a little bit more than what plastic charges and Melio charge, but this particular service is very unique because it allows you to liquidate up to 90% of your credit limits, but the cash can be deposited into your own business checking account for your business. So this is only beneficial if your company itself needs the cash itself. Rather than paying someone else, you have to use plastic or Melio. You still benefit from the 0% APR for 68 to 18 months. If you use the cash liquidation service on one of the cards, they have that 0% offer on it. There's no cash advance fees you have to worry about, no high cash advance APR. That's sort of, it's beneficial with this particular cash liquidation service. So to pre-qualify for business credit card funding with us, you can go to businessfundingreview.com and fill out the form and upload a recent copy of your personal credit report. Now, let me just kind of give you a real quick snapshot on the power of cash, using cash liquidation and having cash available to you, going through a round of funding with our business credit card funding program. So let's just say, for example, we've taken you through the round of funding and we've acquired $72,000 in business credit cards for your company. And this is the credit limits and this is the intro APR you have on each of these cards for that time frame. So like I said, you have 90%, up to 90% cash liquidation access with each of these cards. So with a $72,000 total credit limit capacity in business credit cards, you have almost $65,000 in cash that you can pull from these cards, which is so powerful at 0%. So again, to pre-qualify, just go to businessfundingreview.com. If you did find this information helpful, give us a thumbs up, click subscribe. That way you're always notified when we come out with more videos. And we do appreciate you watching this video. With that, make it a great day. We'll talk to you real soon.